one of those people who have been looking for how best to invest their capital, but have been unable to find a suitable way of doing so? Guess what? Lead Capital has got you covered. With their impressive array of financial products and services, Lead Capital offers you the opportunity to invest your capital in a well-balanced portfolio that offers you financial security and growth. With the Lead Fixed Income Fund, your capital is invested for a minimum of 90 days. But guess what? You can be assured that your money is exposed to very low risks and your dividends are paid out biannually. They also have a Lead Balanced Fund that exposes you to slightly more risk than the Fixed Income Fund. However, this fund also offers you biannual dividends, greater returns, and a minimum holding of 90 days. Also, if you're looking to secure your funds from the depreciations associated with the Naira, Lead Capital has a dollar fund that helps you invest your capital in dollar instruments for a period of 180 days. However, they pay out your dividends biannually in dollars. And if you're a big-time Odogu looking to invest a serious amount of money, Lead Capital has also got you covered. With the Lead Gazelle portfolio, you could invest a minimum of $1 million for a minimum of 90 days and begin to enjoy some impressive returns on your investment. Also, with an investment of $50,000 to $200,000, Lead Capital PLC offers you the opportunity to hold private portfolios with them, where your capital is exposed to medium risk, your coupons are paid to you biannually, and you enjoy the world of Eurobonds, where you could earn interest on your capital investment in various foreign currencies. For more inquiries, reach out to Lead Capital PLC today with any of the contact information displayed on your screen, or reach out to us via our website at www.leadcapitalgroupng.com. Thank you. Lead Capital PLC, your guide to financial security. Hi there. Are you one of those people who have been looking for how best to invest their capital, but have been unable to find a suitable way of doing so? Guess what? Lead Capital has got you covered. With their impressive array of financial products and services, Lead Capital offers you the opportunity to invest your capital in a well-balanced portfolio that offers you financial security and growth. With the Lead Fixed Income Fund, your capital is invested for a minimum of 90 days. But guess what? You can be assured that your money is exposed to very low risks and your dividends are paid out biannually. They also have a Lead Balanced Fund that exposes you to slightly more risk than the Fixed Income Fund. However, this fund also offers you biannual dividends, greater returns, and a minimum holding of 90 days. Also, if you're looking to secure your funds from the depreciations associated with the Naira, Lead Capital has a dollar fund that helps you invest your capital in dollar instruments for a period of 180 days. However, they pay out your dividends biannually in dollars. And if you're a big-time Odogu looking to invest a serious amount of money, Lead Capital has also got you covered. With the Lead Gazelle portfolio, you could invest a minimum of $1 million for a minimum of 90 days and begin to enjoy some impressive returns on your investment. Also, with an investment of $50,000 to $200,000, Lead Capital PLC offers you the opportunity to hold private portfolios with them, where your capital is exposed to medium risk, your coupons are paid to you biannually, and you enjoy the world of Eurobonds, where you could earn interest on your capital investment in various foreign currencies. For more inquiries, reach out to Lead Capital PLC today with any of the contact information displayed on your screen, or reach out to us via our website at www.leadcapitalgroupng.com. Thank you. Lead Capital PLC, your guide to financial security.
Good morning, esteemed clients, listeners, and investors. I want to welcome you to another edition of our breakfast session. I am Akinyemi Omotayo, and joining me is my colleague, Mr. Taufik Akolade. Very briefly, I'll be taking you through the happenings in the fixed income space for last week. Looking at the money market and treasury bills, we see system liquidity closed on a negative region, and we see funding rates close the week at 29.14% and 29.57% for the open repo and overnight rates, respectively. This is majorly suspended on the back of the FGM bond settlement and the OMO auction settlement, which held on Friday. Activities in the treasury market sustained a bullish run from last week as investors' buying interest continued, seeing improved system liquidity. Thus, the average yield declines from 140 basis points to close the week at 23.43%. CBN will offer 955 billion worth of NTB at the next option, as we observe below the result of the last primary market shutdown. From the table, we can see the system's rates remain flat on both 91 and 182 days, and for the 364 rates declined from 22.90% to 21.80%. For the bond market, the federal government bond secondary market closed on a bullish note as we see average yields closed flat. And across the short end of the curve, yields declined by an average of 60 basis points week on week and 4 basis points at the mid to long end of the curve on a tenor basis. Actively traded maturities within the week were the 2026, 2029, 2031, 2033, and the 2037. It's also worthy to note that on average yields across the benchmarks, bonds dropped by 5 basis points to close the week at 20.60%. For the foreign exchange market, the Naira witnessed a slight increase in value as the NAFEM official window closed at 1,531 Naira 20 kobo on the 24th of January 2025 as compared to 1,474 Naira 78 kobo on the 31st January 2025. Outlook for the week, rates should advance further on the back of expected outflows for the week. For the treasury bill market is expected to be influenced by the primary market auction results this week. And for the bond market, is expected to trade in line with system liquidity. That being said, we cannot overemphasize the need to invest in the fixed income market space. This market space can be accessed using a wide array of products ranging from our lead fixed income fund, which focuses primarily on capital preservation and growth. The risk profile on this product is very minimal and dividends are paid annually. It's twice a year. It has a minimum lockdown period of 90 days. I think it's worthy to note that unit holders of this product have experienced over 100% growth in the investment since inception. For our lead balance fund, this fund takes a balanced approach to capital preservation and growth by diversifying across 50% investments in high quality stocks and 50% in money market fixed income instruments. The risk profile in our lead balance fund is medium and dividends are annually distributed with the option for investment for collection. For potential clients and investors that have a knack for fixed deposits, we encourage you to subscribe to our lead Gazelle portfolio with tenor ranging from 90 to 365 days and offering competitive rates that exceed your standard commercial bank deposit rates. For investors that have intention to hedge against the depreciating Naira, we implore you to sign up to our Eurobond trading platform, providing our clients with the opportunity to invest directly in US dollar debt instruments and earn your returns in form of coupons in the same US dollar. The risk profile on this platform is medium and coupons are paid annually. It is worthy to note that the minimum investment threshold to subscribe to Eurobonds is $200,000. For investors who may not be able to meet up with the $200,000 threshold, we are excited to offer you our lead dollar fund. This product has a minimum subscription fee of $1,000 and a minimum holding period of 180 days. Dividend on this product is paid biannually as well, and it comes with a medium risk. That being said, let me hand you over to our in-house equity specialist, Mr. Taufik Akolade, to give you an insight on happening in the equity space.
Good morning, Mr. Omotayo. Good morning, valued investors. Welcome you to today's equities market review. So happy new day, happy new month. This is the second month of of the year 2025. A lot of this is happening. This is the time every valued investor needs to unlock opportunities across sectors, across sectors we have in our market. A lot is happening. Last week, we've seen results coming into the market from some of the highly capitalized and middle capitalized stocks, and those results met market expectation. We're happy because some of those things are in line with our various presentation that investors should take advantage of the market prices, and then based on the 9-month valuations. And now that people have also taken position, it's also an opportunity for people to take more position. But in terms of review, in terms of market review, so last week, in terms of review, last week, let's just have an overview of what actually transpired last week. Our full trading days also occurred last week, but we observed that in the course of those 5 trading days, market only witnessed 3 positive trading days. On Monday, it was up by 79 basis points. And then on Tuesday, it was also down by 44 basis points. On Wednesday, another 57 basis points. And on Thursday, 20 basis points. But on Friday, we could see from that graph that profit taking also dominated the market. That will continue to happen in the equities market. Some tickers will present opportunity for profit taking, while some tickers also present opportunity for good entry. So week on week, last week, we all realized that markets actually recorded a positive gain of 0.85%, and then our year-to-date performance, we are currently at 1.53%, which is also very good because we started the month of January on a good note, and we also ended it on a positive note. So it's a sign that signals that the first quarter is also looking bullish, is also looking very positive. And if you look at this pie chart, it also shows that in our equities market, financial service sector, we continue to dominate activities in equities market because it's a combination of insurance and the banking. And the result we have also been receiving from those 2 sectors, they are also very encouraging. That is why from time to time, those 2 sectors that combine and make up financial service, we continue to dominate activities. They are taking larger parts of the pie chart. And then if you look at the previous one, it's over 74%. So investors are also encouraged that they should also diversify their portfolio across various sectors in our market. So that's why we are also showcasing this pie chart. But in terms of what actually happened, last week we could see all share index has also gone up to 104,496.12%. I said it earlier that ASI changed by 0.7%, and it was fueled by renewed buy interest we saw across some major sectors that underlead capital coverage. If you look at NGS banking expanded by 2.4% because we saw renewed buy interest in some highly capitalized banking stock, the First Bank of this world, the Zenith Bank, and the GTB and the UBA. They are also moving up. Even Stanbic IBTC is also coming out to raise money. The price was also, we also saw uptick in the price of those tickers. So NGS banking expanded by 2.4%. We also saw NGS consumer also expanded by 4.01%. From time to time, we'll continue to encourage valued investors to take position based on fundamentals, while you can also use trend analysis, which we also call technical analysis, to support your argument in taking position. It's the combination of those 2 analysis that will guide you appropriately. So Northern Nigerian firm, it came out with their 3rd quarter result, and the result was very, very impressive. That was the reason why we saw a renewed buy interest. In fact, the ticker has to move to over 60 naira when it started around 14.50 naira. So companies that are also coming out to post good results, we continue to enjoy market patronage. That's exactly what happened. Why we saw NGS consumer expanding by 4.01%, and the same thing Nigerian breweries. Nigerian breweries has been experiencing loss over the last 2 years because of the macroeconomic headwinds in the area of foreign exchange depreciation. But the company came out boldly and raised money through rights issue, which is also fully subscribed. So now they have also deployed those resources to mitigate the impact of FX losses. And then the result that will be coming out soon from those companies, we are likely to be positive. So people have also seen that the valuation for that company is also very lower. So people are taking advantage. We saw expansion. Oil and gas also expanded by 0.97%. NGS Industrial also a highly capitalized index in our market depreciated. The same thing NGS Insurance. Last week, major insurance company witnessed profit taking, Veritas Capital, ICO Insurance, Regency Assurance, Linkage Assurance, and then those 4 insurance companies witnessed profit taking. That was why NGS Insurance also depreciated. But we are likely to see that index changing to positive this week because a publication had come out that all the vehicle owners must have at least a third-party insurance. So on that note, you see a lot of people taking advantage, because that will also expand the balance sheet and the earnings of those insurance companies. Because by the time the people are now, those vehicles that have not subscribed to the third-party insurance, they will face enforcement from the Nigerian Police Force. So that is likely to increase the premium of the insurance company, and it will transcend into the improved earnings. So in terms of click offering and right issue, so we've been encouraging all our value investors to take advantage of the right issue. If you look at it last week, Stanbic IBTC opened at 59 Naira, and we encourage people that you can sell your holdings, because the qualification date for those who will benefit from the right issue are the people who are in the register of the Stanbic IBTC at 29th of October 2024, year 2024. So even if you sell now at the current market price, you can also use the proceeds to go and fund your right issue. That's another strategy. And then by now, you can look at it that the gain has also grown bigger to 27.43%. If you sell at 64 Naira in the market, you can use the money to fund your right issue. That's the strategy. Because we continue to encourage investors to take advantage and opportunities in the market. So we encourage you, sell your holdings, and you can use it to apply for the right issue. The same unit, it's also going to add value to your portfolio. So the window is still open. We still encourage valued investors to fill their form and submit their form. The right issue is closing on 21st of the month of February, and then the qualification unit is 5 for every 22 you have as at 29th of October 2024. So please do that and fill your form so that we can start the collation. In terms of final year dividends expectation, we haven't changed any of these figures. We are still expecting that this company will still come out boldly with this projected final year result, and we have been seeing Q4 result. We're going to talk more on that by the time we move to the company's earnings flash. So, but Access Bank is still a good buy for now. We've seen our recommendation. GTB, United Capital, UPA, Stanbic IBTC, Zenith Bank, ICO, 1 to 16. We're encouraging you that some of these stickers, they have not declared their final year dividend for 2024. So if you really want to benefit from the dividend expectation from those companies, we encourage you that you can take advantage now, because as soon as the dividend corporate action begin to move into the market, you are likely to see uptick in the prices of this company. And what it's going to do to your dividend yields is going to reduce your dividend yields, because you'll be buying at higher price. That will reduce your dividend yields, analyze the dividend yields. So 1 to 16 is you can consider any of those companies. They cut across 5 major indices under lead capital coverage: insurance, banking, consumer, oil and gas, and the other one, and industrial. Please take advantage of that before the window closes. So our recommendations still stand. We are, from time to time, we continue to review the target price and the upside potentials, because one of the key metrics to determine the valuation is earnings per share, PE ratio. We've seen some results coming into the market. In fact, to that of last week, a lot of companies have released their Q4 results unaudited to the Nigerian exchange. And results we have seen in the market have almost 95% of those results met expectations of the analysts and investing community. So we have changed some side potential in some of those tickers. So if you look at 1 to 29, Access Bank, First Bank, FCMB, GTB, Sterling Bank, 1 to 29. Of course, you are going to receive this slide. And even this morning, we have also sent out weekly stock recommendation of Lead Capital that covers over 56 stocks. We are only extracting this thing for the purpose of this morning review. So 1 to 26, 1 to 29, we encourage you. You can take advantage of them on any of those tickers. They are good to buy. You will see more of that when we come to analysis of the company. And the 30 to 37, we're also encouraging you that you can place hold on that, because we continue to monitor activities in that perspective. And some of those tickers, we haven't seen their results. While 38, Geregu, of course, they declare 8.50 Naira as final year dividends, but we have looked at it that the EPX is below market expectation, and the PE ratio and the price to book ratio is also, it didn't even meet market expectation. So those who have Geregu in their portfolio, you can sell it. But if you're a long-term investor, you are looking for a long-term benefit from that investment, 3-4 years, you can leave it in your portfolio, because investors have different investment objectives. So 1 to 38 is our recommendation. Those that are not captured under this slide, or if you look at the lead capital recommendation, we send that weekly, it means they're under lead capital review. So as soon as we conclude the review exercise, we're going to add it to the recommendation that is also going out. So now we're going to just take a snapshot of some of those results we have seen in the market. So to justify our actions and decision that investors should take advantage of some of those companies across major indices under lead capital coverage. We've seen a lot of audited results coming into the market last week, and I've said it that they met market expectation. Let's look at the Stanbic IBTC. Because of time, we try as much as possible to rush. So if you look at the Stanbic IBTC, the earnings per share, which is what is important to every rational investor in the market, has gone up by 44.16%. You can see that the basic earnings per share has gone up by 44.16%. It's now 15 naira 31 kobo from 10 naira. That's also very impressive. If you also look at Sterling Bank, the earnings per share of Sterling Bank has also gone up from 75 kobo to 1 naira 29 kobo. So there's no way the valuation will not change. So we also have other companies. We are going to send you the slide. So if we also look at the First Bank, we also included First Bank in our recommendation, and we're also looking at 33 naira as target price. And this is the reason why we are changing that recommendation. Look at 2023 financials of First Bank. Earnings per share stood at 8 naira is 3 kobo. But now, in their unaudited results for 2024, the EPS of First Bank Holdings has gone up to 20 naira 34 kobo. It means if you look at the PE ratio of this company, it's less than 2%, 2 times. So it's not investing. It means that stock is still undervalued. The same thing, ICO, they have also done earnings per share from 33 kobo to 37 kobo. All these EPS, they are diluted earnings per share for the banks. They have factored their recapitalization exercise. Those newly issued outstanding shares in the market through public offering or right issue have been captured. So it's a diluted earnings per share. So Unilever, of course, they had little depreciation in their earnings per share. But by the time we also see their Q1 result, don't also forget that some of those stickers under consumer, they are also facing the effects. But the stability we have seen in FS markets now in the last 2 months, federal government, central bank has also cleared over 7 billion backlogs. We expect that those companies under consumer, they'll begin to enjoy the stability in foreign exchange. And that will definitely impact on their earnings by the time we see Q1 and the Q2 going forward. Cadbury, the same thing. What's happening to Unilever is also happening to the Cadbury. Further, they have also increased their earnings per share from 12 naira 37 kobo to 57 naira. So they're also oil and gas. They are part of this capital recommendation. Total has also done wonderfully well from 38 naira 3 kobo to 81 naira 94 kobo. They've grown their earnings by 150.46%. They're also part of the capital recommendation for a very long time. So because we track their performance on quarterly basis and on an annual basis. So Beregu, we said you can sell. MRS is part of our recommendation buy. They've also moved from 11 naira 81 kobo to 18 naira 99 kobo. FCMB from 4 naira 70 kobo to 5 naira 45 kobo. Wema Bank from 2 naira 79 kobo to 4 naira 14 kobo. Let's see other results. And then Transcorp Power from 3 naira, that's earnings per share, from 3 naira to 3 naira 33 kobo to 5 naira. Index Nigerian PLC, that's for the half-year result for 2025, from negative of 3 naira 51 kobo to a positive of 5 naira 52 kobo. And then CAPL from 3 naira 9 kobo to 4 naira 86 kobo. NEM Insurance NEM Insurance has also grown their profit after tax from 11 billion, from 13 billion to 23 billion. The essence of displaying this slide is for you to know that those recommendations are based on hard facts. They are based on the valuation, and they are also based on the current happenings and earnings per share of those companies. So we'll continue to use the key metrics to determine whether a particular stock worth investing, either you need to buy or you need to sell. So from time to time, when we see corporate actions, corporate results coming into the market, we will share it with you so that it will convince you as a rational investor that you don't need to sit in the market. You have to be sure that every day, every week, every month, every quarter, you are taking advantage of the market, and then you are reviewing your portfolio. Either you are buying or you are selling. At least you'll be participating in the market from time to time. So our recommendations for the week, some of these stickers we have in our recommendation, we have showcased their performance for auditor of 2024. If you look at Access Bank, we are expecting the one from the banks because it will go through regulatory approval. They'll send it. Their final year result for 2024 will go to the central bank for approval, and then before they come out with the corporate action declaration. But in the banking industry, we are still placing Access Bank, First Bank, FCMB, GTB, Sterling Bank, UCAP, UBA, Wema Bank, and the Zenith Bank on buy recommendation. And you could see it from those results we have displayed when we are looking at earnings flash. And the same thing, ICO, Master Insurance, them insurance. If you are interested in insurance, you take advantage. Why for industrial, Boa Cement, Dangote Cement, and Lafarge, Transcorp Power, you've seen their results. Boa Food, Nigerian Breweries, Guinness, Unilever, all those companies, 1 to 29, we encourage all valued investors that you can take advantage, you can invest in those companies, you can buy, they are good to go. 30 to 37, we're also placing them on the on old recommendation. Why? Geregu, I've said it, the earnings per share did not meet the market expectation. So for now, investor can sell, they can take out Geregu in their portfolio. But if you're a long-term investor, you can also leave it because the company still has a potential to grow in the long term. In terms of our expectations for the market, so that we can entertain question and answer, 2 companies were delisted from the exchange. Those who have those companies in their portfolio, you may not see activities around Tourist PLC and the Union Savings and Loan because they have not met a regulatory requirement that is expected from any listed company in the market. So exchange has the power to take them out. They have been taken out from the exchange. So we have also seen a couple of results across industry, across sectors. Sterling Bank, Wema Bank, we've seen their performance. So we are likely to see more results coming to the market this week, and that will also drive the equities market. The trend is expected to also bring renewed back interest and then performance across the companies that are also doing very well. But this week as well, with results we have seen that also met market expectation, investor will have another positive thing, and you see people taking advantage of current market price because the valuation is going to change. So buy interest is going to outweigh the sell interest for the week. We also anticipate investor will watch out for good results. That's what determines every decision in the market. Companies with good results will only enjoy patronage from investing community. So companies that are also coming out strongly with good performance, some of those ones we have displayed, we are likely to see the uptick in their prices this week. People will take more position because it's guaranteed dividend declaration. While lastly, we expect ASI to move from the red zone to the green zone this week because all this information, all this scorecard, and all these results we have seen, they are likely will serve as a catalyst to the equities market this week, and ASI and the market capitalization will close higher. Thank you. It's time for question and answer. Okay, somebody is asking, Okomo and Presco have been going up. Is there anything driving it? There's nothing driving other than fundamentals. If you look at in the last 1 year, if you check if you have been following up our recommendation, Okomo and Presco will place on buy because I think at a point in time we said that those 2 companies that their product is inflation adjusted, and there's no way a company is bringing out good results. That company will continue to enjoy market patronage. Okomo audited results for 2024, the earnings per share has gone up from 33 naira to 104 naira. It means that even if they're able to declare 50% or 40%, there's no way those who have invested in that company will not benefit. So Okomo results, Presco results is very, very impressive. The same thing Okomo as well. So nothing that is driving it other than the valuation and the good performance. And any company that is doing well, investor will continue to invest in that company. So that's why from time to time we'll be encouraging people, buy Okomo, buy Presco, let them be part of your portfolio. So that's what is driving it. There are a few stocks in your recommendation. Why? This is a time analysts or investment houses need to be careful about recommendation. This is the time corporate action are coming to the market. If you don't do your analysis very well, you now recommend that a particular stock should be taken out. Once that stock is taken out and the corporate action now filters into the market, of course, there's no way that investor will be happy. So we are monitoring what is happening across results. Once we notice a particular result did not meet market expectation, we encourage you to sell. And that's exactly what happened to the Geregu Power. Earnings per share, they are declaring 8 naira 50 kobo, and the current price is over 1,000. So the PE ratio is on the high side. That's why we said we're having few recommendations. So, but if there's a for us to also add it, we have other stock with you need to sell. On our daily stop recommendation that we usually send out, you will see other stock that you need to sell. Thank you. Okay, someone, good morning. What's your opinion on how the price drop and there's no cause for alarm. It's expected. People will continue to take profits. But one thing you should have as an objective, are you a client that wants to benefit from the dividend or capital appreciation? If the price is dropping, some people bought already around 450 naira, 500. If it's trading over 500, there's a capital appreciation. People will sell. But from what you have seen from their result, you could see that they have been able to improve their earnings from to almost 57 naira, from 12 naira. So that's why we also place it on our buy recommendation. There's nothing is happening. UPDC is also dropping. If you also see the UPDC results, their 2023 financials, the earnings per share was zero, was negative. But in their audited result for 2024, they have been able to grow their earnings to 7 kobo, which is also very good. The price may be dropping. It may be a kind of market corrections. Market continue to enjoy market corrections. So as this price is dropping, it presents opportunity for people that also want to come in. So that's what is happening. Is stock price cannot be in one direction. You see movement like a business cycle over time. You have any wonder? Yeah, please. Okay, somebody is asking, do you think Veritas Capital worth buying? No, it's still under our review. If you want to take any position in any insurance company, we have ICO, we have Master Insurance, we have M Insurance. So we haven't completed our review exercise on Veritas Capital. It's not our recommendation. So we can't advise whether you should buy or you should hold. It's under our review. Your opinion in Transcorp is part of our recommendation. It's under conglomerate. It's worth investing, and we have seen their results that they have also been able to grow their earnings. That's what we are usually consider. We follow key metrics, not only the technical analysis. 52 weeks, 52 weeks. We also use that to support other evaluation metrics. But if we really want to take advantage, Transcorp is also part of our buy recommendation. By the time you see our elaborate recommendation we have sent out, you'll see it under conglomerate and place it on buy.
In the absence of any more questions, I want to thank you again for listening, and we'll see you again next week, Monday. Thank you very much.